Hello students, welcome to Friday University. My name is Neil Pathikar, and in this video we're going to discuss why I am bearish on AMC stock. Alright, the first reason that I'm bearish on AMC is that the movie theaters have not opened to anywhere near the 100% capacity that they were in the past. And even when they were open and good to go sell tickets, popcorn, all that good stuff, they were losing money. So they're losing money when they have 100%. Now with barely 25 to 50% capacity, imagine the detrimental losses that will bring in the long term. Reason number two, the amount of streaming services are now greater than they were 2-3 years ago. Examples of this are Disney Plus, Hulu, Netflix, HBO Go, etc. Why would you pay to go see an overpriced, shitty movie when you can sit home and watch that same movie for no charge? AMC is going to take a huge hit as well because of reason number three being Universal Studios going to direct consumer market, and they are the number one movie maker in like America or something. So if they don't give AMC the rights to share the movie, how are they ever going to play a movie? Trolls did way better. So now I want to discuss how a chart that I see on my screen can make you money. So it's going to be how you trade the stock bearish. Here's AMC. Here's the 1 year, 1 day stock or chart. So as you see, it went down because of the crash. It has rallied from the lows of 195 and has had some good green days and gap ups. But no matter when it gaps up, it continues to fail and fill the gap below. So here's a prime example. It gapped up on bad or some fake news as usual, and it fills that gap below. Here it was gapping up and it went down, filled the gap below. So now ask yourself, where is the next substantial gap? Maybe you could say right here. Maybe you can say right here. But I think the biggest gap on AMC's stock is right here. And if this gap fills, that is a huge gain. So now, how do you create a position size that'll be reasonable to make that money? I don't want to lose money, Neil. Well, let's see the last 5 days. It was trading in between 3 something and 420, 440. Again, almost hit 475. So now every day you're going to take a good 10 to 15 share position, which is roughly 40 to 50 bucks, and your dollar cost average over these next days will be within this range, around 450 to 375, 380. Now, if all of your shares are in this position, well, what happens if it goes to 5? Okay, don't sweat. You didn't get too many positions and size, too many shares, but you're hoping this is the resistance and it's going to go down. Take the loss at 5 and bet on it to go down to 353 and potentially 250 to fill the gap. And if all of your shares are in this range, you're going to have an amazing gain when it goes and fills this gap in this range. That's almost a 40-50% return on your money. And when you dollar cost average, you're not getting it all at once, so you're not stressed if it goes up 10 to 15 points. It'll only go up to 5, take the loss, and if not, look to go for 250. So you're risking 75 cents to make $2, roughly $2, almost $2. That's an amazing return. So do your own due diligence and take 2 minutes to look at this chart and study it for yourself. Know where you're going to enter, exit, and how this chart makes you feel. And that 2 minutes will make the difference in you making a lot of money or no money at all.